associate. So IAS 28, investment in associate. So when it comes to IAS 28, like I said, it's going to be accounted for in accordance with what? Let's say using equity accounting. So anytime an organization is having shares in another organization, which is more than 20%, but not up to 50%, therefore, the organization will be having a significant what? Influence. So with an investment in associate, what that we do is that we need to bring the cost of investment, the cost that, let's say, Bernard incurred in buying this 30% share. So you bring the cost of investment. If there is any post-acquisition what? Period, or if there is any post-acquisition profit or loss, that maybe the associate, let's say, is having, therefore, you need to also bring it on it. If there will be any issue concerning dividend received from the associate, you bring it up. If there is another provision, if there is any provision on unrealized profit, that one too, you bring it up. Then the last part of it will be that, that let's say, you get your investment in associate what? Total. So here, what I will do is that let's bring out some of the stuff that comes under investment in what? Associate. So one, the first thing that you need to think of it is, let's say, let me bring my currency sign because of measurement, this one. So we first have to bring our cost of investment. So the cost we incurred, you bring it. You have to, okay. So you have to make sure that you are bringing your cost of investment. Then you bring your any post acquisition profit or loss. So you bring this one, so it can be profit or it can be loss. Okay, so it can be loss or it can be a profit. Okay, so so with this one, like what I'm going to continue with it is that, okay, when you get your cost of investment, you bring your post-acquisition period or profit or loss, you bring any dividend received. So if there is any dividend received from the associate, dividend received. So that this one we need to, since we have received, we need to take it off. Or if that there is any impairment in investment in associate. So impairment in investment in associate. So this one we need to come and what? Deduct it, because impairment in associate also we need to take it off. Then if that there is any PUP, post provision for unrealized profit. Provision for unrealized profit. This one we need to come and take it off. So with this, when you finish with this, it gives you the total for the investment in what? Associate. It gives you the total for investment in associate. So this, how anytime you get a question where there is investment in associate, this is how that you go by it. The cost of that investment, the post-acquisition profit or loss, that may be you get from the associate side, dividend received. Any dividend that associate will pay to you, you need to come and subtract it because you have received it. Or any impairment in a investment in associate, to come and subtract it. Any provision for unrealized profit. All these things, this PUP, I will get into it very, this one, so that you get to understand it proper. So I don't want to throw more light on it when I start treating it specifically based on maybe so that you can understand it. So I don't want to rush on the provision for unrealized profit because it contains a lot, so you need to understand it. So this is how that you get your investment in associate. So this one is the first of the 5 basic workings. That's the group structure. Then this associate thing just came in because that Bernard acquired 30% shares in Prince Limited. That's the reason why the investment associate came in. So we are now going to deal with the second group structure, and that one is net asset of the subsidiary. So let's go into that very quick. Let's go into that. Net asset of the subsidiary. So this one is the second of the 5 basic workings. So this one we need to know. When it comes to the net asset of the subsidiary, we don't need to worry much about it. Even though that it contains a lot, but you should be able to get some of the small tips so that you can be able to, let's say, go through it. All the things that we are going to do here is that we want to know let's say, the cost, or maybe how that of the asset of the subsidiary. How much does it cost? All the asset, because we are now going to acquire some percentage from it. So we want to know the cost of it. We are doing our own assessment to know the net asset of the subsidiary. So for you to do this, all your mindset supposed to be on the net. Your mindset is supposed to be on the figures that is only related to the subsidiary. Because in the question you'll be having figures that will be for the parent, figures that will be for the subsidiary. So anytime you are doing the net asset of the subsidiary, don't go and check anything at the parent side. Because the moment you do your group structure, you get to know that whether Bernard Limited is a parent or is a subsidiary. So the moment you get to know that Benjamin Limited is the subsidiary, therefore it is Benjamin's will be that of the subsidiary. So here, anything you are going to do here under the net asset of the subsidiary, you should make sure that you are basing on the figures that is beneath or that is below Benjamin. So anything that is below Benjamin is that you are going to base on to do better. So never go and turn to anything on the parent side. So if you want to go through this, you need to also know some things that you should know. First, under the net asset of the subsidiary. So let me bring this one out so that I will get some free this one. But I will get the board to be big, small. Okay, so under the net asset of the subsidiary, you need to get to know that there is some